In this video, we're going to calculate personal income tax, and this is part 2 in the tax series. Please go and look for part 1, which deals about all the theory it deals with that. Okay, let me give you the steps to calculate personal income tax. Firstly, you're going to find your annual gross salary. Now, how do you find that? You say your monthly salary, monthly gross salary, times 12. All right. And then in your second step, you will find your taxable income. Please go watch video 1 on how we find our taxable income. But it's basically the gross salary minus the taxable deductions. Okay, and then the third step here that we need to look at is the tax bracket. You choose your tax bracket that you fall into, and then you do the calculation there. Okay, fourth step is subtract your rebate. You choose the rebate, primary, secondary, or tertiary, and you subtract it. And the fifth step is that you look for your medical aid credit, and you also subtract that. And finally, now, if they want you to get your monthly tax, your monthly income tax, what you do is you take that amount from number 5 and you divide it by 12. Okay, let's look at an example where we use this. We talk about a 37-year-old male. It is important to know his age. He earns a gross monthly income of $29,460. Note that that's monthly. Then he pays 7.5% of the salary into his pension fund, and he also pays 105 Rand to his union as a membership fee, and he pays 2,300 a month for medical aid for himself and his wife, so it's for 2 people. And then finally, they want us to calculate his monthly tax. Okay, so let's start with our first step here. Our first step is to find the annual gross salary. Now, a tip is to write down whatever you're going to do, because the markers in the final exam must know what you're doing. So annual gross salary is to take that monthly green amount of 29,460 times 12. Okay, and you'll get an amount that says 353,520. Right, then number 2, we now need to find our taxable income, which is your gross salary minus all your taxable deductions. Only the taxable deductions. Okay, so in our case, if we want to find our taxable income, what we need to do is we need to say, okay, I'm going to take that gross salary that I just worked out. It's that 353,520 minus, now the deductions here, we start with this red guy, his pension fund, which is 7.5%, and if something is 7.5%, it's actually 7.5 over 100, times his monthly salary, which is, or in this case, we're working with the annual value, so it's his gross salary, that's green one, of 353,520, minus also then the UIF that he pays. So minus that yellow one, UIF is 1%, 1 over 100, times and also that 353,520 amount. Okay, and when you work out this guy, you get a final amount of me just get those per month guys gone. You get a final amount of 323,470.80 Right, now in our third step, we're looking at the tax bracket this guy fits into. So since he gets 323,000, so you always work with your latest amount. Number 2 amount that we got, he fits into this tax bracket. So let me highlight it in yellow. Ooh. Fits into that guy. So now we need to say 67,000. We need to follow this calculation here. 67,144 plus 31%, which is 31 over 100, times of the taxable income above 321,600. So we use our taxable income from the previous question. So I'm going to put that amount here, 323,470.8. That amount above 321,000. So we actually subtract that amount. And this is all just using that tax bracket calculation. Okay. Now when you find your answer, you get 67,723 and 948 cents. Now very important also, do not round off. Okay, finally we go to step 4 now, and in step 4 we are looking at our rebates. Right. Now, when you're looking at rebates, you have to subtract that, and he is in the category 37 years old, so he's in the first category. And there we go. Also, make sure he is above the threshold. How do you do that? You check out the amount you worked out at number 1. The annual amount was, it's the 53,520, and that is above 83, so he is above the tax threshold. Then you can continue, right? If he wasn't, then it means that he doesn't have to pay tax. He's lucky. Okay. So rebates, we now take the amount we just worked out, which in number 3, 67,723, 948, and we subtract that primary rebate, 14,958. Okay, and when you get your answer here, you're going to get 52,000 and 765,948. Now this amount that you just got is your yearly tax amount, right? So we've been working out our annual tax amount this whole time. This is actually your annual tax amount, and they say, if you go and watch our first video, after you've done that, now you are at a point where you can work with medical aid credits. So after you work out your tax, then you work with medical aid and subtract that if this person has medical aid. So I'm going to remember number 4, the amount that I just worked out, that was 52,765 and 948 cents. I'm going to remember that amount. And then go to number 5 now, which says we must work out the medical aid amount. Now since it's him and his wife, you'll see that he pays in this medical aid column 473 rand, and this is per month. Remember that. So we go to this credit of 473 rands because it's taxpayer independent, that's 2 people, times 12 because we want the annual amount, and that one was per month, and it's 5,676. Now we take our annual amount, annual tax amount 948, and we subtract medical aid credit. Okay, so we subtract this medical aid credit. I must write here what we're doing, so it's medical aid credit. Good. Now after that we get an amount of 47,000 and 89,948. Now the question also asked us, find your monthly tax. So how do you find the monthly tax? Super easy. We just use our last amount. We always use the last amount that we were just working with. And so I'm going to put that in, 47,000. If this is the amount for the whole year, we only divide by 12 to get the monthly amount. So monthly tax amount that he has to pay is 3,924 and 16 cents. Also remember this is your monthly tax amount. Let's also just put that in blue so you'll remember it. Now in the next question, there is another question. It says, calculate the man's take-home pay. How do you get take-home pay? You say, you want your gross salary, the gross annual salary, the gross monthly salary. In this case, you can do monthly because you want to know what he takes home every month, minus all your deductions. Whether it's now taxable or not, we want to see what he gets out if you subtract all his deductions. So we will now start with the gross salary that he gets, the monthly one. Then we're going to subtract the UIF because he also gets UIF. And we're also going to subtract that union membership fee that he talks about and his medical aid. We will even subtract his tax and also his pension. Okay, and any other amount that he made mention of in this case, but we got all of them. So go and read this part again to make sure you have everything. So his gross monthly salary they gave it to us in the little reading part that says 29,460. His monthly UIF is 1% of, so it's 1/100 of that monthly 29,460. Then his union amount, he said there, he pays 105 Rand to his union. And his medical aid, he said he paid 2,300 Rand a month for his medical aid. The tax amount we just worked out, it's this bottom blue one, 3,924.16. And the pension is 7.5%. So it's 7.5 over 100 then of his gross salary, which is 29,460. Okay, you work all of this out. This yellow amount, when you work it out, is 294.6. And the tax amount is the red one, 2,209.5. Put all of this in your calculator, subtract it, and you will get 20,626.74. Okay, so I'm just writing all the other amounts in here so that you don't miss steps. And also then that's the end of our video. That's how you calculate his take-home pay. Please remember to share, like, subscribe, and become part of the Whiteboard SA team.